G'day folks, welcome back to another update for natural gas. Now the daily chart's still showing a bullish momentum, but just wait for that fresh CCI breakout to start trading long if you're trading on the hourly. Before you go any further, make sure you hit that like and subscribe button to support the channel, and also reference the +1 videos for a deeper dive into some of the trading strategies we look at. In terms of the outlook, the natural gas market as of mid-October is characterised by moderate yet rising spot prices around $3 million British thermal units, underpinned by strong LNG export growth and growing global demand, even though domestic US inventories are reasonably healthy and starting the winter season above average. What sets the market tone now is not just the supply-demand balance, but the geopolitical risk backdrop, damage to infrastructure in Ukraine, and Europe's shifts away from Russia-piped gas means that supply disruption fears remain live, prompting a risk premium on prices. Overall, the market appears to be cautiously optimistic. Prices are unlikely to spike dramatically, but the combination of export demand and winter heating seasonality and geopolitical uncertainty suggests a modest upward bias rather than a sharp downturn. So the weekly first off is showing bullish momentum above the moving averages, and so is the CCI. So that's a positive. If you're trading on the daily, you go in the direction of the weekly. On the daily, what we're looking at here at the moment, it did actually break into that moving average range on the price chart, but it's finally broken, fresh breakout on the upside of the price. But again, notice the CCI is below the moving averages. So I'd like to see that break above that moving average band to give us more positive, better clarity, if you like, to go long on the hourly if you're trading on the hourly. So remember, we always trade on a higher time frame. And even if you're trading on the daily, we always look at the hourly for any micro moves. And what we're looking for is any divergence. And what we had back here, for instance, we had a lower lows on the price versus the same period higher lows on the CCI, and that actually bounced. And the way we measure that, doing a Fibonacci, we take the lowest point from there, going back to the significant high, which was that point, and we expect a 38% retrace as a minimum. And you can see there it broke up through that 23% initially, retraced, and it broke up to the 38%. And sometimes it just touches that and then continues on a downtrend. Other times it breaks right through it. So at the moment, that's moving in line. The CCI is moving in line with the price, which is what we normally expect. Also notice back here we had a bearish divergence, lower highs versus higher highs in the price. And if we to measure that Fibonacci, let's just get rid of that for a moment. That broke down and we take it back to the significant low. That would have been that area there. You can see there we drew a target and that hit that target very easily, and it went down right down to the 61% level before starting to bounce possibly after that bullish divergence. So that's how we read the divergence, and I use them to, if I'm going long during this period and I see a bearish divergence, I'll take my opportunity, take my profits and let the CCI and the price do its thing, which it did here. In this case, if I'm going short and I'm seeing a bullish divergence, I take my profits off the table. Now, looking at the back test, again, we always go in the direction of the higher time frame. So I've got marked here with an arrow where we would have gone long with the price above the moving average band. The CCI likewise was at that point, and that's here on the 1 hour time frame. So we trade on the direction of the daily trend on the 1 hour. Now, what I like to do here is, we're looking at these moving averages. Whenever they're both in sync, they're going up, start taking long trades, and when they're declining, close out your positions. Again, going long there, let it run, start it to turn down. Now here was giving you a hint. There was a bearish divergence, so you would have been cautious, waiting for this price to break down, which it eventually did. So that was giving you a warning. Now in this case, the price started rising again. The CCI started rising as well, but again, notice both the price and the CCI moving averages declined. Start taking another long entry, and then they both started to decline again. But notice also we had a bearish divergence on this second period, as I've already said. Now going down here, taking short trades, let the price drop a lot in accordance with the price moving averages. But again, after you see this bullish divergence, you take caution and you pay very close attention to where it may start to turn, and it turned there, and you would have closed out those short positions. So for BOIL on the weekly, the price is below the moving average, and so is the CCI. So taking short trades only on the daily if you're trading the daily. On the daily chart, we had a bullish divergence here, very slightly higher lows on the CCI versus lower lows on the price. But then the price started to consolidate, and you can tell by the moving average constricting as it did there. I'd like to see the moving average band widen like it did here to give you more confidence to go short in this case. Alternatively, back here when the moving averages are widening, to go long. Now at the moment they're consolidating, so you may want to stand clear until the price decides which way it wants to go. The CCI is giving you a bullish momentum, although it's currently broken below the moving average band, but you can see there it's slowly rising versus the price remaining flat. So again, I'd sort of stand clear on this one to see where it moves. On the 1 hour time frame, again, what we're looking for here is any divergence. So looking backwards, I want to see something very obvious, and there's nothing really obvious there until we go back to this period. Higher lows to that point initially, but then again to that second point there, double bottom, versus lower lows on the price, and then eventually bounced. That's on the 1 hour time frame. Looking at the back test. So looking at the long positions going long from this period on the daily, you could have taken a couple of trades there, and again closing it out when the price started to decline, so you would not have entered that period there. You would have got out somewhere in that point there with a bit of a profit. But going back to the short positions from about the 2nd of June, let's go to, where are we? To this period here, 2nd of June, again, same sort of principle, going short when the moving average of the price and the CCI is in decline and closing it out when they start to turn against you. Notice here, for example, you would have been going short during that period and then avoiding that drawdown by closing out your positions once you see both moving averages start to turn against you. And back here, you're noticing the bullish divergence, and that was giving you a warning back here to close out your short positions. That's how I use it. So for UNG on the weekly, price is below the moving average, bearish momentum there. CCI likewise, so bearish momentum. Now we did have a bullish divergence back here, longer term, starting back in start of 2023 and finished, or actually kept going since then. The price kept dropping, but notice the CCI kept rising. Now it wasn't a dramatic rise, but it still rose slightly. In this case, it probably didn't hit the 23-38% range that we anticipated, but again, sometimes they fail. In this case, it did. And at the moment, the prices both, and the price and the CCI both declined below the moving averages, giving us bearish momentum on the weekly. On the daily, again, at the moment, you'd be going short with both the CCI and the price below the moving averages. We had a little bullish divergence there. So you should have got out of any short positions once you saw that. And on the 1 hour time frame, what we're looking for is divergence, and there's none I can see. That CCI is moving in line with the price. So that's all consistent until we get to this point here, higher lows versus lower lows, and the price bounced and hit our target range at 23-38% range. But at the moment, you would be going short predominantly, but at the moment, pause. Actually, that's possibly a bullish divergence. If you want to read that double bottom on the CCI, that's a bullish divergence versus the same period lower lows on the price. So that is a bullish divergence, and to draw a Fibonacci on that one and take it back to that significant high, we can expect the price to retrace as a minimum to the level. And like I said, more than 90% of the time it hits these retraces. We'll keep that there and see how it does in the coming hours when the market opens. So that's the hourly, slightly bullish on the hourly, but again, we don't trade on the chart in isolation. We trade in the direction of the higher time frame. In this case, the daily is going short, so you take only short trades. Now looking at the back test, again going short from this period around about the 15th of May, as indicated here on the 1 hour chart and the daily, going short during those periods and avoiding when the price on the CCI and the moving average band on the price start going against you. And also pay attention to these bullish divergence to get out of the trades as a warning. So at the moment, you would have avoided that drawdown because both price and CCI started to increase, and you would have got out maybe with holding 1 or 2 contracts at that point there. For KOLD on the weekly, the price is above the moving average band, and so is a fresh breakout on the CCI, giving us a bullish momentum. So if you're trading on the daily, go in the direction of the weekly. On the daily chart, we've had a bit of a roller coaster here, short during this period when both the CCI and the price was below the moving average, finally breaking above going long during this period when both the price and the CCI are going long, but you're about to close out your long positions on the daily at the very latest if you're not already on the hourly. So at the moment, bullish momentum on the daily, and notice as well we had a bearish divergence here, and that broke down, hit our 23-38% range. On the 1 hour chart, again going long at the moment, and you would have closed it out, as I said, near the high there on one of those candles when the CCI broke into that moving average range. At the moment it's bearish on the 1 hour chart, so just be cautious. Again, we always go in the direction of the higher time frame, so at the moment going long only on the hourly. Don't take any short trades yet until both break below the moving average on the price and the CCI on the daily. Now looking at the back test, so working on the short positions during that little period first, based on the daily, you would have gone short during there and closing it out near the bottom there of that price with a CCI broke into that moving average range. So you would have closed it out with a nice little gain there. And since then, you would have avoided this period, and you would have taken long trades from that point there when the price started breaking through that moving average band, and so did the CCI, indicated here on the 1 hour chart. And you would have been in that trade and closing it out at that point there, and probably avoid taking that trade. I'm just letting the program run during this period, but you can see there that would have been a close at that point near the high based on the CCI closing into that moving average range. For some added benefits, why not subscribe to the Patreon page on a free trial at least, and look at some of the bullish shares we've traded. And these are some of the trades we've had since around the 20th of September this year, generating about 3,300, trading $5,000 lots. And at the moment we've got a couple of trades open, but that's $3,000 we've made in about a month of trading, and that's about almost 9% return in about 30 days, so not too bad. So to get access to that, go to the Patreon page, links in the description below, to subscribe at least on a free trial. Thanks for watching, hit that like and subscribe, and we'll see you in our next update.